Hi, everyone. Welcome to our uLaw webinar. This is the February webinar session.
It'll be great to learn from you guys.
Hi. I'll be putting the webinar in conversation mode, in presentation mode and presenting the webinar. And at the end, we will come back in conversation mode, and I'll take a few questions. The number to dial is on the screen, so if people have, I'll keep that in the corner. So if people need that information, it'll be there. So this webinar is about trust reconciliation in our software. Some of the questions that we will try and answer is what is trust reconciliation? What are the guidelines towards trust reconciliation? Should it be that complicated? Can it be really done very quickly? What are some of the benefits to your practice if you can do something like trust reconciliation very clearly? Now, before we jump into the details of what trust reconciliation is and how do we need it and why do we need it, for the sake of this webinar, I tried to pull in two guidelines. I want to show a spectrum of guidelines. One is the Law Society guidelines from Ontario. I have that on my left-hand side. And on my right-hand side, I have the British Columbia Law Society's trust guidelines. And both of them have reconciliation requirements, like, why you need to do them, how you need to do them. And you will see a lot of commonality between them. Like, obviously the biggest reason why you need to do reconciliation of your trust account is to see whether what you are recording is actually accurate with what you actually have at the bank. The recommendations are very clear that, reconciliation is a process that has to be performed at least once at the end of the month. Make sure that you're stopping your accounting process, making sure that everything that's there in your bank book, cash book, matches ledger by ledger with what is there in your accounting system. So if you are managing your accounting system using, say, Excel spreadsheet or some other software, this process outlines what you actually have to do on the end of the month. If you look at the Ontario guidelines, they kind of say 25th of each month is very important. The British Columbia one is saying, how you do it, and how do you kind of match up. Now, at the end of the process, no matter, whether you're from Ontario or Columbia or any part of Canada, what you need to do at the end is prepare a statement like this, which is what is your bank statements? What are your outstanding checks? What are your outstanding deposits and your trust listings? And then the two lines here need to actually match up. If they are not matching up, then, we basically have a trust reconciliation issue, and you need to get to, resolving the problem. Now, the problem comes basically if you're not recording things properly, right? If you're doing things in bank, that are incorrect to what you're even allowed to do. What certain softwares can do is basically build in guidelines around how this should actually even be done in the first place. Okay, so that your trust errors can be minimized. Your reconciliation becomes a very simple and easy process. And at the end of the day, you're more focusing on your practice rather than actually focusing on accounting. The more you practice on law, the more you're getting revenue. So if you have to be focusing a lot on reconciliation, that's not good to your business. So what we will try to do is, in this webinar, walk through a very simple intake process. What are some of the trust errors that can happen? How softwares can actually help you control these trust errors? And at the end of the day, we will try and see how, reconciliation actually is a very, very, very simple process. So to do that, obviously, we're going to go into our software. So I'm having an account here. And, this being, very close to the last week of the month, today is the right day to actually do a reconciliation because, it's 26th of February. But, we should have done this yesterday, which is actually the 25th, and see how the process is actually going to work. Okay, so let me now create a client. So I'm going to create a client here, and the client is Chad Wilson. And let's save a matter. And let's just walk through a process of actually creating, a matter for him. Let's say this was, I'm going to assume that this is a criminal, DUI matter, right? You can assume whatever type, but I'm going to assume a DUI matter. So I just created a matter, called DUI. And let's say this person, this whole thing happened 5 days ago, right? On 21st of February, he walked in with, say, a $2,000 retainer. Now, obviously, you can do payment collection in our software, okay? You just click on the payments, and, if you're subscribed with, say, Monatis or Pivotal Payments, we will allow you to do that. I can show you an example. For example, you can just say, that is my collection. I want to validate. The software will allow you to do payment collection. Let's say it was a Visa or a MasterCard. I'm going to put a fake one because it's a fake account. And you can choose what kind of, you can ask him for the expiry. Let's say that, and take in that. And we already know it is Chad Wilson. And you can pay now. And when you do that, when you collected the payment, this could be a check, it could be anything. It'll give you a reference number, right? You will copy the reference number. In this case, you'll say he paid using credit card, and that's my reference number. Obviously, you need to give a receipt, so you can put a receipt and do and apply. Now, this is the first rule that I want to bring up. When you collect a retainer, it has to go into trust account. So the software mandates you not even to go into general account. So you now know the payment collection was in trust, the account that you've ledgered is in trust. So when you do this, the two have just matched. And this is your receipt. So I'm going to just download the receipt. And here it is. The receipt is here. And you can just open it, and you should have the receipt, and it should clearly indicate how the payment was actually connected. And you can even get a signature from him. You can say, hey, this is $2,000. It was collected using credit card. Here it is. Whatever the person is, you can get the signature. Done. Okay. Now, once you've collected the receipt, now let's look at our accounting guidelines to see how we would have done. Now, if you have attended our previous webinars where we talked about chart of accounts, how uLaw actually manages things, you would know that we manage things under trust as an asset. And under liability, there's a second account called the liability account called trust amount client. So what I'm going to do is I'm going to go into pool trust account, and we are going to now see the Chad Wilson's $2,000 right here, deposited. Now, when I actually click on it, it clearly shows me that it has a credit into the liability account. Okay. Now, this is what we have actually recorded according to the accounting software. The 2,000 would have also got recorded in the trust account. So as you see, if the two events happened at the same time, when you actually did the event and when you actually recorded the event, the chances of you making mistake is lower. And that's exactly what happened here. As you saw, I recorded the 2,000, and when I go to trust amount clients, right, the software automatically recorded the $2,000 credit here as well on 21st of February. We said that, right? So when you do a recording in the software and the actual event at the same time, the chances of you having error is further reduced. So now I'm going to go through the motion of actually putting the client. So let's say there was an initial client meeting, and I'm just going to put one record. Let's say it's a flat fee, and I'm going to charge him, say, $400 for that. Maybe it was like a couple of hours initial client meeting, understanding it. Let me quickly go through the notion. You can do a pre-bill, okay? But in this case, I'm going to directly go and actually do an invoice. So let me do an invoice and download. So the invoice was created today, right? The retainer was received a couple of days before, but the invoice was actually created today. And that's our invoice for $400 with $52 of HST, adding up to $452. And if we go back to the software and hit the question mark, it tells you that $452 is the invoice that you created. It was done on 26th. The trust fund was received on 21st, and you now are allowed to do a transfer. So let me click on the transfer button. And when you click on the transfer button, this is where the software has to be smart to tell you exactly what to do, because we want to minimize trust errors. So in this case, it's telling you that you cannot transfer a cent more or less than $452, because that's exactly what you invoiced, right? And you can hit the transfer button. Maybe that was a check that you actually did. So I'm going to write the check number, 1234, and you hit the transfer button. And you actually did the transfer, you wrote yourself a check, and you've done a transfer, right? So when you actually do it in the software and do the process yourself, you're going to minimize the chances of having issues in reconciliation, okay? Similarly, even complex issues, like, for example, let's say you paid a disbursement. Let's say it was an $80, and it was actually a court, it was a check number was, say, 12345 in this case, okay, and it was a court fee, and it was paid to, say, Brampton Courthouse, right from your trust account. You can even print a check, and when you hit the payment, you will actually print the check, right, and go and give it to the Brampton Courthouse. Now you've recorded it and the event, and the check has been printed, and it's leaving the building at the same time. So again, the possibility of you having errors is minimized. Now, what's happening as you're putting things into the matter is not only we consume this information to tell you projected balance and all other information on the screen. If you go to accounts, you will be seeing that we will be automatically ledgering as well. So in this case, if I just follow Chad Wilson, so let me just search for CW, it's now you're already following that $2,000 was received on 21st, $452 was withdrawn on today as part of the legal invoice, and $80 was withdrawn from trust as part of this disbursement that was actually paid out. So as you clearly see, the software is slowly matching up with what you are actually doing physically in the bank. And when you do this, automatically, the chances of reconciliation errors and all that stuff is fairly reduced. So let's now go back and let's do some more interesting complex disbursements. Let's say general disbursements. You can say paid from general. Let's say this was an application fee, and the application fee was somewhere about $50, and now this has tax, and you paid it to municipality of, say, Peel, and you actually, maybe you paid cash for it, right? And maybe you paid it from your own pocket. You can say owner's pocket, and you can hit the save button. So this time, you paid for a disbursement, you can invoice the client and recover it. So let's say we invoice the client today. Obviously, there was no billable this time. We're just invoicing the client. And now the invoice should only have the disbursement. So no fee, and the disbursement is $56. If you go back to the software and hit the question mark, it'll tell you that you have to do a $56.50 transfer. Maybe that one you actually did using an electronic fund transfer. So, you can say I did an electronic fund transfer of that disbursement. Obviously, you should have a requisition number for that, and you can hit the transfer button. Obviously, in Ontario, if you do that, you need to download Form 9A, which I'm going to skip for this webinar, but compliance is again met here. Now, if I go back to the matter and I hit the question mark, it's telling me that so far I've raised $508.50 of invoice. everything has been paid in full, but in trust, only $588.50 is moved away, and 1411.50 is what is left in as balance. Now, when you start the reconciliation process, the primary goal is you got to know all your outstanding checks and deposits. I'm going to show one example of reconciliation, and then we'll come back to it. So when you click on document generation, and you actually click on reconciliation, and you do a trust, the first and foremost thing that the software is going to ask you is what are some of the outstanding checks that are there. So in this case, 1234 and 12345. Let's assume that these two checks have not been, paid so far. So that's like $452 that you actually are $532, which you're actually expecting, to have left your bank has still not happened. So that means your bank balance is expected to be somewhere like it's going to be 550.13, right? Somewhere that's what your bank balance is going to be. So if your bank balance is that, and these two checks haven't left, your bank, your reconciliation number that you're targeting is somewhere here, right? Now, if you just download, your reconciliation statement should be done. I actually did this statement under a minute. So let me now bring up the Law Society template. I'm going to lay it out here. And right in front of you, I did a reconciliation, and let's look at it. So we said in bank we had 4450. I just clicked the two outstanding checks because I know that I just wrote those checks today, so they wouldn't have got cashed. So that means, the mixed balance trust, what I'm expecting is supposed to be this amount. And these are the two checks that I declared as outstanding. And these are my listings for each of the client. And let's look at Chad Wilson. The last transaction I did for Chad was today, and I expect his balance is 1411.50. And there are other people in trust, right? There are people like Ryan Peters who have not had any trust activity from 2014, right? And there are people these are all the February trust activities that happened. But in 2 minutes, you just saw here that my reconciliation is done. So if we maintain records right when the stuff happened, and if the software can prevent you from actually doing the wrong things, reconciliation was just one click away. As you saw, all I did in this process was just click on document generation, reconciliation, trust. I just filled in the amounts that I expected. My outstanding checks was the only thing that I had to actually look in my bank to find, and I was done. So how are other things that you can do in trust as errors can be prevented in software? For example, let's say this client paid us more money, and if you try to do it as a client payment, the software does not even allow you to do that because there's no work that you've actually done for which you need to take payment. Because if I hit cancel and if I hit question mark, there's no outstanding balance in invoice. So that means the software is already directing you towards, if you get any new payment, it should go more in the direction of trust rather than in the direction of general. So that's one common error that most people do, which can cause a lot of reconciliation grief, is taking a check and depositing it in the wrong account. So the software, again, when you record it itself, if it gives you the notion of not doing the right thing, it can do that. Now, obviously, if you're collecting payments using credit card, and if you actually go into our accounts, you set up completely a separate trust terminal for collection of credit cards, and a completely separate one for general payments. So now in this example, obviously I've chosen Pivotal Payments, but if you had Monadas, again, see, that's completely a different store ID, and this is completely a different store ID, right? You maintain completely different flavors so that even when you hit the credit card payment and collect the payments, the money is actually entering the right account and you're not physically doing a mistake. Okay, so that's one way in which software can actually help you collect the funds and record in the right way. Okay. Now, another place where most people do mistakes is trust transfers. So let me now, to show that error, I'm going to show you, I'm going to create more. Let's say, I'm going to put another one, let's say attended court, and let's say it's a 1.3. I'm going to hit the save button. I'm going to put a few more disbursements. Let's say, it was a fax, and obviously fax, we want to give in numbers. Let's say 10 fax at 75 cents. I did it from my office, so I can just do it this way. And let's say some mileage, like I want to charge lawyer travel mileage, and I can say 55 kilometers at that. So now we put quite a few disbursements and matter events, and I'm going to now raise an invoice. And when I do this, I should again be careful on how I actually do the transfer. Now, when you go and actually raise an invoice, the invoice clearly tells you how much was raised. So in this case, $293.80 was your fees, and the disbursements this time is $55.09. So a total, you need to add up $293.80 plus your $55.09 and actually do the transfer. Now, if the software can accumulate this and tell you exactly how you can actually transfer, that's easy. So what we'll do is when you click on Action button and do a Trust Invoice Payment Transfer, when you're paying yourself, the software can bring out line items that you can transfer. For example, you can transfer the legal fee. So you're allowed to transfer $280. You can transfer the fax that you actually did. So you're allowed to transfer either $293.80 or $302.28 or $348.89. The software does not even allow you to ledger a very funny amount, like say $350 or $385 or some funny amount because of which you can have, a recording or a reconciliation issue. Now, obviously, when you kind of hit the payment, saying that it's electronic fund transfer, this is the time where you would pause and say, oh, I know I need to transfer $348.89. You would open a new tab, and you might go to your rbc.com, right, and actually do your transfer because we told you to do so, and then come back to us and actually put the transfer requisition number that they would have given you and hit the transfer button. And we would right here prompt you for Form 9A so that you have even more record of your transfer, and you can say, my trust account is that, RBC General, that's my general account, and this is my trust account, and that's my RBC Trust. Hit my download, and I even get a record of what I exactly transferred, and it's right here. So again, as you saw, by you hitting the this button to Trust Invoice Transfer, we kind of regulated what you can transfer. If I try this again, the software now prevents you again from transferring anything. You can keep selecting and say, no, you can't even transfer anything. $0. That's it. So trust errors have to be stopped right at the place where they can happen. And to do that, the software has to build on very rigid trust guidelines. It should not allow you to over-withdraw. It should not allow you to under-withdraw. It should exactly demark what you can withdraw and how you can do things. Okay. For example, at this point, right now I have $1,000.62 in trust. I'm going to put a very artificial event, let's say a big one. Okay, let's say I put, say, 6 hours, just to be, just to get a very artificial invoice above this value where the client now owes me that money. And if I do an invoice again, the software has to be exactly smart to tell you what you can transfer and how much you can transfer. So let's now hit the download button. Now this can be a very misleading information because when I look at the invoice clearly tells me that $1,356 is what I've invoiced. But that's not the amount I can transfer from trust. The reason is when I hit the question mark, it'll tell me that. It'll tell you that even though your pending transfer for your invoice is $1,356, which is what the invoice actually said, if you look very carefully, your trust does not have that much money. So if you accidentally go and transfer $1,356 from trust, your reconciliation is going to fail. That's why right here in red, we put saying you can only transfer 106261. And even when you hit the transfer button and you choose that amount of 1356 to transfer, we only allow you to transfer 1062. So your recording will drive you to compliance automatically. The max amount is there. So over withdrawal from trust is almost prevented by huge margins. So that's why it's very careful that you follow the procedure of invoicing and then transfer from trust, invoicing and then transfer from trust, and not do the opposite. I mean, it's very tempting to do the opposite because you know you're going to invoice, but there could be a million things that can go wrong. So that's why we kind of put you into that frame of mind where we will not even allow you to transfer unless you actually, recorded an invoice. And right now, yes, you can go ahead and choose the electronic fund transfer, go back to your RBC, do your work, and then come back, and type the number and hit the transfer button. Okay, again, asking you for Form 9A. Obviously, it should remember most of the details that I put in last time. And if I hit the download button, now the trust transfer will be exactly the amount that I am allowed to transfer. So if I go back to the software, go to that particular matter of Chad Wilson, and I actually do a question mark, I should now clearly see that, the question mark should kind of tell me that, I don't have any money left in trust, and that's what, I'm waiting for the client to actually pay that extra money. So as you saw in the demo, as I walked you through the creation of the matter, how I was creating invoices, and how I was doing trust transfers, the guidelines for every matter prevents you from either over withdrawing from trust or under withdrawing from trust based on where you were. Now let's talk a little bit about compliance. I mean, we will come back to reconciliation because that is the main topic, but the Law Society goes fairly beyond reconciliation. You need to maintain a lot of things, journals and all that stuff to help you reconcile in the first place. First and foremost thing is you need to download what they call the Trust Receipt Journal. Now, the Trust Receipt Journal has date, who did you receive the fund from, what was the purpose, amount, and the method. That needs to be recorded properly. The second thing that you need to actually record is your disbursement journal. Now, the disbursement journal has date, the method, who was the money paid to, and the purpose of the payment, and the amount. Okay, it needs to be recorded. Then if you look at trust ledger listing, it's basically receipts and disbursements captured together. For every client, you need to do that. And then subsequent, that's all for trust. Now, if you move on to general, they want a receipt journal for general. We even care about the disbursement general, including things like all your supplies and how did you pay your rent and all that stuff. And then your general ledgers are also required. And then they ask you to maintain a fee book. Okay, same information but in a different format. And finally, they ask you to maintain ledgers. So that means you're roughly looking at about 8 documents that you need to maintain on a monthly basis. What we have done in the software is there's a lot of documentation to maintain. We've kind of brought it into a single, what we call compliance window. So what you can do is you can click on document generation and click on compliance. And when you click on compliance, it kind of brings out all the stuff that you need to do. Like, for example, I need to do the trust ledger for the month. So I can just say download monthly and just hit the download button. And when I click on the download button, it will download the trust ledgers. Let me close all the other documents. And I can open it. So when I'm going to again do a comparison of our trust ledgers with the Law Society's recommendations. Let's look at this one. So that's August the 30th, February 25th, 2015. The reason or the particulars, it was basically a retainer, $100 was received, and it's now the balance in trust is $100. Now, this Chad Wilson's account that we just did a few minutes ago should be here. Here, Chad Wilson, the $2,000 that we received is right here. So there's a complete match of what we did in documentation with respect to what the Law Society is actually going to review. If I go back to the software, that's done. It walks you through the next one, which is general. So you can just say general, monthly, download. And now what I should see is I should see a monthly view of all my general ledgers, how I've been collecting all my invoices. So let me now go to the Law Society's guidelines on general ledger. Here it is. You need date, particulars, expense on behalf, fees, HST. That's exactly what we have, date, particulars, fees. We split out the HST right here, account, and the balance that is being owed. So in this case, if I would look at, say, the Chad Wilson's one, here it is, the $452 of invoice that we first collected, which was $400 plus 52, is laid out right here. Pretty compliant with how they want to lay out stuff. The next document in terms of compliance, so once you've downloaded, we don't allow you to download it again. The third one is trust receipts. So let's go back and see how the trust receipts look like. The trust receipts have date, received from, purpose, amount, and method. So you can just say, I want to do the trust receipt for this entire month. Do a download. And the trust receipts, it's very important to capture the source information, which we would have done for every matter. Here you go. Who did it come from? Who paid for it? So in this case, on the 21st, Chad Wilson actually paid for the DUI matter. It's been captured. And how was it paid? The method is credit card, and the reference number is also captured here. Similarly, I'm going to skip a couple, let's say you already downloaded some of them. You can just mark them that you've done it. General disbursements is another one, which is a very interesting document, because in that one, you need to capture the taxes a little separately. You need to split the amount and the HST into two separate columns. That's a lot of bookkeeping to actually maintain, and the software just does it very intuitively without you even knowing. So here you go. So that's basically date, the method, who was it paid to. So in our case, we paid a couple of things to Toronto Courthouse, right? The municipality of Peel. It's all here. It's being captured. Notice that the one that we paid to Brampton Courthouse is not captured here, because that was not a general disbursement. That was a trust disbursement. So when I do the trust disbursement, you should have seen that. And we actually go beyond what the Law Society even wants you to do. This is basically, we kind of give you an analytical view of money that was spent on the client and money that was spent in office. We also give you how did your disbursements actually look like. Business expenses were that much. These are all the client expenses. How do they actually all add up? We kind of give you that view. We kind of give you a view of expenses on clients versus expenses on office. So that way that, hey, this is money that I'm recovering. So, this month was not actually a bad month on expenses, kind of gives you a view. Okay. Moving on further to Law Society's guidelines is what we need to do is what they call the fee book. So we have fee book here. So you can say, I want to do fee book. And you can say monthly, download. Now, fee book, again, has a very particular requirement, and it has a meaning. Obviously, you want to know who are all your clients, and the invoice number and what they were billed and the total. So that kind of is being laid out here for this month. Like in Chad Wilson's case, we had invoice 2086, 2088, and 2089, the three invoices, and then the disbursements corresponding to them. We have laid it out, and that's the total. But then it also gives you a very nice view. In this case, obviously we're doing very well in the criminal silo of business. The real estate is coming second. Family and wills are coming third. Like if you had a multi-area practice, or if you are a partners where people are concentrating on each of that, kind of give you a view. I mean, this is not a Law Society guideline. I mean, this is the last line that they care about in an audit. but we go a little further because this really affects the way you are doing your business and kind of lays it out for you. So again, doing things in the right form in the matter with having the right restrictions, to me, this is like pretty much a freebie. Like, again, a view of how all your clients are, who is your best client of the month. So it looks like Chad pretty much sits right there, and kind of gives you a view of disbursements versus your legal work. So that's money, not yours. This is your revenue. Kind of gives you an idea of the total that you actually made. 94 is what you get to keep, right? Kind of a view. So that kind of completes all our reconciliation guidelines, right? Expense book is also another one, like fee book. You should pay attention to your monthly expense book too, because expenses are something that is going away from the business. So it's a good practice to actually keep an eye on it and see whether all the expenses are actually correctly entered and you're doing good. Like, for example, was the application fee correctly entered? The partner lawyer fee, everything that we entered as expenses is all there. That's your total expenses for the month. Kind of gives you, again, a view of client versus non-client expenses, right? Again, this is on the expense side, which is the business expense is the worst, and these are all for every client. For Chad, we had $56.50, right? Kind of lays out everything for you. Now, the last compliance document, again, is your reconciliation statement. You can just say reconciliation, and it should, again, bring back all your outstanding checks. So let me just do, again, the exact same, $400 and $532. So if that means if I would do 43108.63, I think. What did I open? 532. So wish I had done this using my calculator, but there you go. If I had put that, and if I would hit the download button, I'm just going to place this bridge audio because there are some people who are not able to join. And let me just bring down this. And if I open my reconciliation statement again, this time Chad should be actually missing in the statement. So that's your total. That's what it adds up. Those are the two checks that haven't gone out. But if you look at the end, it stops with Anakin Skywalker. You actually don't see Chad, basically because everything for Chad was actually withdrawn, and that's your balance in trust according to us. Reconciliation is balanced. Again, it took me less than a minute or two to actually do. I mean, in real life, it's going to take a little bit harder because the hardest part is finding all your outstanding checks. Now, typically, the way we advise people to do that is open your bank account. You have a record of all the checks that went out because, in the software, when I actually did the reconciliation, it shows you all the checks. It tells you, this is doing it for the last 4 weeks, but you can actually click here and go all the way, right? So I'm going to do, so if you look here, that's the most likely check that we wouldn't have got. That's an outstanding. Electronic fund transfers most likely will not be, but sometimes they also can have a 24-hour waiting, right? So that's electronic fund transfer, but that's another check. So you kind of have an idea of all the checks that you're looking for, and the check numbers are right here. So if you just focus your mouse, it kind of gives you a view what that check is, and then you just have to make that listing. And once you've made that list, then the rest of the trust reconciliation should be fairly straightforward and simple. Now, what we wanted to also emphasize as part of this is, one end, the most important thing for you, obviously, is maintaining compliance to your law society, whether, if you look at, the British Columbia one, or if you look at, the Ontario one, the most important one is how you actually maintain the records and show your stuff. That's very important. But we would like to emphasize that on top of that, if you can actually take your understanding of your business a little extra by doing some analytics, there's nothing like that. Now, I showed analytics as part of the analysis itself. Like, for example, when I did a monthly fee book, it did analytics for me, in a very presentable manner. But we also bring analytics visually for you in graphicals. Like, for example, there's a monthly, analytics that we brought here. But if you want to see it on screen, what you can do is you can do analytics right here. You can say, I want to do analytics of my accounting, and you can say what kind. Like in this case, I want to do fee book by category, and I want to do this month, and I want to do an analysis. It can bring out the exact same data for you here as well, and I can do a bar chart or a pie chart, right? Criminal was 42.77. Criminal was 47.78. So that's rounded, and that one is a much more accurate 779. So you could actually do analytics, and this is like your downtime activity. Like, obviously because you've completed your reconciliation so quickly, you can do some downtime calculation to see how you're doing in your business. Like you can say, hey, who are my top clients for this month, right? And just do a quick analytics on them. John Bill, Chad Wilsonstein's right here. So that's a bar chart of all the people, who paid this month and how did they actually pay. Okay. Okay, so that would be another way by which you can actually do, your analytics and kind of stay on top of your matter. I mean, at the end of the day, the recommendation from law society is you want to be on top of your accounting. Okay. Now, what we have achieved in our software is by making things so simple. As you saw, I never went into the accounting page at all. All I did was I went into the accounting page only to do one activity, which was document generation of my compliance document. That's the only thing I went there. I didn't go here and actually do ledgers, or I didn't do any receipts, or I didn't do any trust payments. All I did was for the compliance requirement, I went and did my compliance requirement. That's what I did. The rest was all controlled right in the matter screen. Whether it was putting the dockets, or whether it was raising the invoices, was it calculating pre-bill activities, even doing trust transfers, putting things into trust, managing things out of trust, all my analytics, everything was actually done right in the matter screen, which is what, as a legal professional, you're used to doing. And when you do that, the software translated that into very, very powerful accounts, which you didn't have to actually ledger. There was no button here to say action, add ledger. You didn't have to do all that stuff to produce all these requirements that the law society is actually asking you to do. So with this, we've come to our 45 minutes of webinar on trust accounting. So let me just bring out, and hopefully we have answered all the questions. So we've seen what is reconciliation process. Very simple. Reconciliation process is matching what you have done in your bookkeeping equivalent to what's actually happened in the bank. What are the law society's guidelines towards trust? They clearly tell you, you got to maintain these documents. And that's what we brought it out using our compliance ledgers. The thing that we again covered is, should it be really that complicated? Our answer is no. If you would do everything in the matter and you would follow what we are telling you and how you're withdrawing, things should be fairly straightforward with respect to, the compliance. It should not be complicated. Can reconciliation actually be done under 10 minutes? The answer is way under 10 minutes. I was able to do a quick reconciliation under a minute, but you should give yourself at least 10 minutes to do a proper reconciliation and make sure everything is good. What are some benefits of practice? As you saw, if you were able to do things in a very orderly manner, you were able to produce all your Law Society guidelines, but also on top of it, like, you were able to do some analysis, understand your business better. You can focus a little better on your future. So, all these analytics kind of bring in those useful things, like, that can actually, help your business grow better. So with that, we come to an end with another session of our uLaw webinar on trust reconciliation. I'll be opening the lines, and, for the next 10 minutes, I'll take questions. I think the lines are open, and if anybody has any questions on what was presented, you can ask, and I can walk through, it in more detail. There could be some background noise, like, if you are not asking a question, you can just put your phone in mute. I do have one question on the chat line. The question is, how do I get to the compliance? So you just want me to show the compliance thing again? Let me just show that. So that is under Accounts. You will click on Document Generation, as I showed here. And this is where you would do all your documents. You would do Ledger, Trust, General. You would do Journal. You would do all these here. Balances is where you would do, and your reconciliation you would do here. The compliance is actually, it's a culmination of all these ones. If you just click on the compliance, it brings out all the documents in a single shot that you need to download. Now, I did do downloads. You don't have to actually do downloads. Like, if you just want looking for Chads, you can say, I want to see Chad Wilson's, and you can actually hit on the Show Only button, and that'll just show Chads. Like, you can just see it here, right here. So that's, Roger Moore's account for Chad, DUI matter, the $2,000 receipt, and all the withdrawals. The balance is $0 because $2,000 was received and $2,000 was given away.
One other question on the chat line is, how often is it possible to do trust reconciliation on uLaw?
That's a good question. I mean, if you look at the British Columbia one does not talk about, a requirement, but the Ontario one is very clear. They prefer you to do that on the 25th of the month, must be completed by the 25th of each month. Now, if trust reconciliation was actually so easy, why would you not even do it weekly? It's a good thing to do it on a weekly basis because you can just click here and say document generation, reconciliation, trust, pick all your outstanding checks and just do a reconciliation and be 100% sure that you're not going to be stuck on the 25th doing a tough reconciliation. So it's easier to remember when things have happened at that time. So we recommend either a weekly or a bi-weekly reconciliation. The Law Society would like to see you do that every 25th of the month. Now, as part of the reconciliation, what you get to do is also do your compliance documentation. So, it's a nice process. The more frequent you do it, the better you are. It depends on the volume of trust transfers too. If you know that this month was a very light month, you don't have to do it on a bi-weekly basis. But if it was like a real estate law where, the trust transactions are so heavy, we strongly recommend to do it on a weekly basis.
Another question is about the payment processing.
Mm-hmm.
And I believe the question says, what are the types of credit card payments that we accept? I think the question leads to other providers.
We got to be a little careful here. It's not us who's accepting any payments. Okay, we have integrated with two payment collectors, the two most popular ones in Canada. One is Pivotal Payments, and other is Monatis. Now you can go to pivotalpayments.com. And, you should discuss with them what kind of payment options. But to the best of my knowledge, they accept all standard credit cards, Visa, MasterCard, Diner, and all that. So they basically accept all that. But I strongly recommend people go to pivotalpayments.com to find out more about their payments. All uLaw is doing is, as we showed you, it's allowing you, the compliance is better, when you actually do the event right at the same time and record it. So in this case, just to walk you through that example, like, in this, the client actually owes us $393.29, and if you did a payment, and if you actually recorded that as $339, I just want to show another thing. If I just put here 40 cents, the software will say you cannot, so, and sorry, 39 cents, 39 cents. And if I hit the payment collection, and if I do a validation of the fields, and if I hit the payment collection, these are the ones that they actually offer, Visa, MasterCard, right? Just putting a fake credit card here.
Just here on the same screen, I think there's another question which is kind of alludes to the same topic. How are the charges taken care of? I think the question is, how are the credit card charges taken care of within uLaw?
Again, this is, you need to discuss with Pivotal Payments how they're going to charge. Now, both Pivotal and Monaris are trust compliant. That means when you actually collect the money from, like, say in this case, like, we collected $239.39, they would have put this in general. But if you had collected this in trust, they would put the exact money in trust, and they would do the charges actually in general. Now, I'll show you quickly how to do that. So so you can just put that approval, here, and I would do an apply. But the way you would enter, anything like that is because it's an office expense. As soon as you see that in your bank, you can just say accounts, action, expense, office expense, and here, interest and bank charges. I would put it under bank charges, and you can say Monaris monthly, whatever charges, right? Like, and you can accumulate the whole per transaction fee, and let's say, like, I did $200. Now, it might not be HST recoverable, so you can just say an exempt, and just say 200 again. And, how was it paid? Like, it was paid to Monaris, and it was actually paid directly as a debit, right? Like, so you can just choose here and say debit, and hit the submit button. That would be a way we would record, the expenses that actually are incurred because of that payment. But both these companies, Pivotal and Monaris, when you set them up, you need to ensure that you set yourself up with two accounts. One is a trust store and another is a general store, and they both have different account names. Like, they have different account names, they have different passwords, so that, like, you set them up properly. I don't see any other questions on my chat line, so.
That's it on my end, too.
Hey, Praveen, if you would want to give the final closing statement, we can end the webinar.
Well, I want to definitely thank you, everyone who's participated today. If there's any questions, please feel free to email us or visit us at uLawPractice.com. We're a Canadian compliant and really cost-effective practice management and accounting software. We do provide a no-obligation 30-day trial where we can walk you through our onboarding sessions how the product can best work for your firm. So feel free to give us a shout, and we'll do our best.
Thank you, everyone.